Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.
Hitting it out of the park. This is Paul Harris for Kitco Mining at the 2024 Gold Forum Americas in Colorado Springs. Who's hitting it out of the park? Why, Ron Hochstein, President and CEO of Lundin Gold. Ron, welcome back to Kitco.
Thanks, Paul. Yeah, that's a little difficult to follow, but thank you. It's kind words.
Well, they're not kind words. I think that expresses the reality. Every time we sit down together, there seems to be a raft of new accomplishments to talk about and to celebrate at Lundin Gold. The big one this time is the company is now debt-free. Let's start there. Why did you decide it was better to clear your debt rather than hold onto it like a lot of your peers are doing?
For us, it was an opportunity, especially the debt that was left after last year. We paid down the gold prepay and the stream last year. And so we're left with gold prepay and the senior debt. So we were left with the stream. And that just continues. That could have continued for many years, and really just continuing to take the opportunity to take that cash flow and put it to growth or to our shareholders. So it just made a lot of sense, and fortunately, and it worked out to be a win-win transaction for us and Newmont, who now hold it. They did not want to continue to have this stream, and just made a lot of sense for us. The economics are significant. And as a result of us now having paid down all that debt, we've taken that cash that we were paying our bankers and Newmont, Newcrest, and started returning that to shareholders. So announced that we're going to double our dividend from 10 cents a share to 20 cents a share, roughly $200 million annually payable to our shareholders.
Now, we are at an investor conference, of course, and in your conversations with investors, is that something that they comment on? Because as I mentioned earlier, a lot of other companies in the sector hold on to their debt because it's low priced rather than perhaps paying it off and taking advantage of their cash flows to, really strengthen their balance sheet.
Yeah, I think it is, Paul, and a part of it is timing, is that, we haven't seen this yet with this continued rise in gold prices. We're anticipating to start to see more interest in the equities. We've seen it in the bullion itself and the ETFs, but not in the gold equities. But we are starting to see that because the generalist investors are starting to see this continued rise in gold price, and that it could be a very good hedge against, we've seen copper prices fall, other base metal oil prices fall. Gold is held in there, and as you know this better than I do, Paul, all the indications are for gold to increase. We look at interest rates dropping, the US dollar losing against the other currencies. All those are indicators of a stronger gold price. Are already at all-time highs. We're not far off even from an inflation-adjusted all-time high. So now we're starting to see those generalists come in. And for us, then they look at yield. They're coming into gold because they're not seeing the return. But then to actually get a dividend yield on top of it has we were lucky in that we did all this, and then we saw an increase in gold and a new interest from the generalist shareholders.
Now, FDN, Fruta del Norte, you're mining Ecuador, high-grade gold. It's an asset of a generation. It's printing money. With gold now at $2,600 per ounce, what does that do to the economics of the project and your ability to grow cash in the future?
Well, we're generating, in the first half of this year, we generated just under $200 million in free cash flow just in the first half, in the first 6 months. And now with that debt gone, and even with the increased dividends, we're going to be generating significant cash. So, what we're doing now is we started really ramping up exploration 3 years ago in 2022. And, we drilled a new target called Bonza Sur. First drill into that was January 23. And, we're now looking at opportunities to really look at organic growth and step change opportunities at Fruta del Norte. We're expanding Fruta from 5,000 ton a day to 5,500 ton per day, implementing new technology on flotation to improve recoveries to increase production. But what we're looking at now with the exploration drill bit and the success we're having is what's the next step change for Fruta del Norte, which again, we've got the cash to be able to do that.
Okay, I had the pleasure and the privilege to visit Fruta del Norte in June. I was struck by several things. One, the work ethic and pride of the workforce that seem to be striving to make continuous improvement of the operation, making that better and better. The number of optimization projects that you're able to sort of tackle to enhance the economics and the production, and as you alluded to in your comment just now, the exploration potential and the great results the VP of Exploration, Andre Oliveira, is getting. How much bigger could Fruta del Norte get?
Oh, I think we've just really scratched the surface. But I think, Paul, the big thing that's really changed a lot with Fruta del Norte, as you say, is a generational type deposit. It is an anomaly of an anomaly. And what Andre's coming on board is really got our exploration team to start thinking more about the traditional epithermal type model. And by that sort of change in views, we're hitting new targets, new districts, and that to continue to keep developing. We currently have 11 rigs turning, 8 rigs on surface, 3 underground. And can we do more? That's the big question. But then Andre has started talking about, Ron, we've got this Suarez pull-apart basin. That's really the epithermal. But then we start looking at our entire land package that really has seen very little work, and the geological potential there is significant. So, quite frankly, Paul, how big could FDN get? This, I believe, this is a district. This is going to be where we're seeing something operating for many years, and the potential to expand that to beyond just even a gold operation. We got indications of potential copper porphyry type targets and everything, which again, copper gold. It's a lot of opportunities here, and the surface has just barely been scratched.
Okay, now to sort of take advantage and bring those opportunities forward, in your planning, you're starting to plan you're going to need additional infrastructure, whether that's a shaft or other declines, and what sort of timeline are you thinking on the ability to actually increase the footprint of operations?
Really what we're looking at right now is Bonza Sur, which is the new deposit to the south of FDN. That could be a potential open pit type deposit. So for us to pursue that, and it also looks like the metallurgy is different than the existing FDN. So for us, that could mean a new mill and an open pit operation. A lot of the other things like Fruta del Norte South, Fruta del Norte East and all that, that's accessing it from the existing underground workings. And some decisions we made early on to go with the twin declines and that, we've got a lot of flexibility in the mine. So I think for us, the next step will be this expansion of the mill, and then some debottlenecking may take us to that 5,500 ton per day, maybe a little bit more. But then the next step in terms of infrastructure is going to be, what are we going to look at building for the next mill?
Whilst I was on site that week, the company was hitting throughput records that you wouldn't let me talk about. Excellent. Now, FDN is cash flowing, it's fully de-risked, your debt is repaid. Would it be fair to say the company still has a certain Ecuador discount for being a single asset producer in a jurisdiction that not everybody likes?
I think, Paul, it's more the single asset type things. We have seen where single asset recently have had some issues. So I think it's a little bit more that discount. We get a lot less questions on Ecuador than ever before. I think, the current administration, President Noboa, is really trying to show that Ecuador is open for business. He's doing a very good job of really attacking the security situation, focusing on youth unemployment, and he's working on a lot of free trade type agreements. And I think when you talk to the Ecuadorians on the street, they feel this is probably the most optimistic they've been in several years in terms of the future of Ecuador, and with a stable and a good government.
Okay, interesting you say it's perhaps more the single asset overhang on the company. So are you looking to transact to reduce that potential risk, perhaps a little bit like Calibri Mining did with its acquisition of the Valentine gold deposit in Newfoundland in Canada?
That's something we're a Lundin Group company. We're always looking for merger and acquisition growth opportunities, but we're not driven by that. We don't see the risk of single asset as much as maybe the outside investor does, because we live and breathe it. And as you said, the site, you've met our operating team. They are focused on continuing to do the best they can and do it safely, and meet all our environmental regulations. Those are the things that we really focus on. So for us, it's more growth. Growth within Ecuador is where we see the greatest opportunity to create shareholder wealth. And then the other aspect, it'll come when there's some opportunities, but we're not going to do it just for the sake of doing it.
We've seen a couple of sort of bigger transactions in the gold space recently, and in preparing for this event, I was looking at the sort of leading, let's say, 10 gold producers, and I think 8 or 9 of them have done a transaction in the past couple of years. One noticeable exception there being Barrick Gold. What is your view on where we are in this sector? Do you anticipate M&A heating up as companies make more money because of the higher gold price?
I think it's going to be driven, Paul. Yeah, the answer is yes. I do think we are going to continue to see an increasing trend in M&A, but I think it's partly driven by the fact that some of these companies have their reserves and resources depleting, and they want to maintain their production, and they haven't maybe kept up the exploration, and there isn't a lot of there are a few, but there are not a lot of new exploration opportunities out there. And so that's what's really driving the M&A, is to be able to say they can maintain their production profile and maybe show some growth. It's going to drive more of that.
Well, I can think of a company that could help them with that, although it perhaps would be a big gulp. What is your thought on inbound attention to Lundin Gold?
As Lucas used to say, and as Jack and Adam now say, we're a Lundin Group company. The for sale sign is always in the front yard. We focus on just making sure we're always focused on increasing shareholder value. So whoever does knock on the door, we're going to make sure that we're getting the best value we can for our shareholders. We're not wed to assets. We're always open for those inbound opportunities.
Now, investors invest in gold companies because they want exposure to the gold price. Yet the more mature gold companies tend to hold a lot of cash on their balance sheet rather than perhaps gold. Shouldn't gold companies hold gold rather than cash?
That's a good question. I hadn't thought about that. It's something we haven't talked about, but I'm certainly going to go away from that and think about that, because potentially, we're focusing on returning capital to shareholders. We'll build up our cash as the year goes on, but that's more for development opportunities than that. But it's something I'm going to talk to our team about. Okay,
another aspect that perhaps will come from the higher gold price. A lot of the gold producers have their reserves at 12, 13 or $1,400 per ounce. Obviously, we're way above that now, and most analysts think it's going to stay that way for a period of time. At what moment in time will the sector revalue its gold reserves? Because you could argue that they're currently understating their business and therefore misrepresenting their business by maintaining these low reserve pricing.
I think there's still going to be, if you well remember some of the history in the gold space where prices started to go, and then companies increased the price that they were evaluating their reserves or resources at, and their cutoff grades would fall, and they wouldn't be generating as much cash flow, right? And I think investors are much more focused on free cash flow. So I think companies are going to be more hesitant to modify those prices. I'd be surprised if we see anything in this year or the next, Paul. I think it's going to have to stay at these levels for a little while before we'd reevaluate it.
There does seem to be a certain PTSD, post-traumatic stress disorder
absolutely.
in the investor community.
Yeah. And that's why it's taken so long for the generalist investor to come back in, because of that bad experience.
Well, what do you think it's a case of building up trust again, I imagine. So what do you think will be the trigger that gets a generalist investor comfortable again? Will it be seeing these 100% share price appreciations here today, that kind of thing, when the growth is so evident they can't ignore it any longer?
I think we're starting to see it. I think we have gotten through it, and I think part of it is that the fact that the gold price has held in, and all indicators are that it should be increasing. So I think the generalist community is starting to look at, we are certainly seeing that in terms of investor interest from investment funds that we have not seen before. And we're getting invitations to go to cities that are traditionally more a generalist bed of capital versus a mining. And so we in the last 6 months, Paul, we've really started to see that shift, and I think it's just starting.
Okay, now looking ahead, let's do a forward-looking statement here. What do you think Lundin Gold will look like in a couple of years' time?
I think in a couple of years' time, we will be we will have our resource, our mine life will still be 12 years plus. We're going to be in the process of environmental permitting, doing an amendment to our permit, and an engineering study underway for a new operation at Fruta del Norte, and continuing to explore and continuing to create opportunities.
Well, I wish you the best of luck with that, Ron. Before we go, how do you think the rest of the year is going to play out for the gold sector?
I think it's going to be very positive for the rest of the year. I think there's a lot of events happening over the next little while, and we're all sitting in anticipation of a potential rate cut here in the U.S. I think that it's a very exciting time for investors and for the gold sector.
Well, it's certainly a pleasure to see somebody with a smile on their face. Last week at Beaver Creek, there weren't too many of those, despite gold hitting record levels. So congratulations there as well.
Thanks, Paul.
And Ron Hochstein, thank you very much for joining us today. Really appreciate that.
As always, thank you for the opportunity.
We have plenty more to come from the 2024 Gold Forum Americas. So hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.